What's up, traders? Let's do a complete multi-time frame analysis of AUDNZD. Make sure you stick till the end. I'll be showing step by step how we can trade this instrument in the new trading week. With that said, let's start with first of all higher time frame on the monthly. Now, monthly time frame AUDNZD now showing a very smooth monthly trend line. Let me draw this one here. What you see that this current month price just tested this very historical long term trend line. So you see there is a one touch here, one touch here, one touch here. So this trend line can give a very important clue, because if you zoom out of the chart, what you see that this is a historically downtrending market, and this is the topmost trend line of this historical downtrending market, and we can expect AUD and ZT now to start its downtrend, historical downtrend to the downside. And if you draw this level of support here, what you see that AUD and ZD is likely to fall back to this level of support. So we have a big move ahead on AUD and ZD. On the monthly, we are bearish. Going down to the weekly time frame, let's see. Now the same is on the monthly is showing the same way on the weekly. Again, if you zoom out of the chart, you can see the pattern very clearly. Long week candle, a big move, long week candle, a big move, long week candle, a big move. Now there is a long week candle, we can expect a big move to this level of support zone. So AUD and ZD on the weekly time frame also bearish. Now let me draw a very important trend line on the weekly time frame with AUD and ZD. If you connect all these dot here, now you see that on the weekly we see a smooth trend line. Why I'm drawing on the weekly? Because it's very clearly seen the weeks of the candle. So you see a lot of resistance here, and we see a smooth trend line. Let's see on the daily time frame now how we can correlate this trend line on the lower time frame. Now on the lower time frame, as you can see that this trend line, let's draw it a bit adjusted on the daily time frame. Now we see that this trend line was respecting here as a resistance here, and also respecting here as a resistance. Now also test broke here, now tested as a support here. We see a uprise, again tested here as a support and uprise. Now this last day of trading week, what do we see that the price just closed below this trend line. Now as you can see that this is on the daily respect, it is a very long term trend line, and a trend is not over in one day. So what is likely to happen in the new trading week? We could see an uprise to this level, creating a possible head and shoulder pattern. So we have a head, left shoulder, we are missing a right shoulder. Now if we see that the price is moving to the upside along this zone, testing this trend line again, creating a right shoulder, and we could possibly see a break of already the trend line is broken, we could possibly see a move to the downside. Now let's see on the 4 hour time frame then how we can enter a trading in this situation. So we already see this trend line is level. Now this is the confluence zone. As you can see that it is likely to create a possible head and shoulder, and we will be waiting for this pattern to develop. As you can see the price on the 4 hour, what happened, there is a move, consolidation move. Now we see an uprise, so we could see a possible uprise something along this zone, testing this resistance, support as resistance, basically resistance here. There is a lot of areas acted as resistance here, support. So this is a basically support and resistance, supply and demand zone acted at different level at different times. So we could expect this one acting as a resistance in this zone. As soon as the price will go there, we'll see a complete head and shoulder pattern. According to the rules of our strategy with our student, we'll go for short from here with a high risk to reward ratio. Now if you find value in this analysis, smash the like button for me, and also leave a comment below to help this idea. Thank you for watching. See you soon in my next analysis.